Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq 100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me is Brian Joyce, Managing Director on Nasdaq's Market Intelligence Desk, to discuss the continued outperformance in the Nasdaq 100. And Brian, it makes sense. People are putting their money to work for the stocks that are the future of our economy.
Good afternoon, Jill. Thanks for having me. And yeah, I mean, it certainly does make sense. You know, the Nasdaq 100, the Nasdaq Composite has certainly been the leader this year and over the last couple of years, and really since we've emerged from, as you noted, the financial crisis, more than 10 years ago. So we're a tech-driven economy these days. Industrials, are less and less part of that. It's certainly there, but technology is certainly is the future and the present as well. And we're seeing once again in the month of July, the Nasdaq 100 is outperforming all of its peers. It's up 5.5%. It outperformed in June. Year to date, Nasdaq is up over more than 23% now. So it's really just been a phenomenal run. Technology and discretionary, has been driving that.
Yeah, it certainly has, Brian. And let's take a look at your first chart here to, get some insight from what the technicals are telling us.
Yeah, so the technicals, price is king, and price is, continuing to make new highs. And so we're seeing that today. Once again today, the NDX has, gone out to make a new all-time high. We noted previously that the Dow and the S&P, they made their recent highs. Let's just say comparing to the March lows 4 or 5 weeks ago in that first week in June. I think it was back on June 8th. So the Nasdaq is continuing to march higher and higher. Other areas like the Dow and the S&P have been consolidating. So I think in the next week it will be very interesting to see how the market holds up next week to 2 weeks. We know the Nasdaq is in a bull market. It's the rest of the the Dow, the S&P, the Russell 2000, energy stocks, financial stocks in particular. We'll get a good insight as to how the next week or two will unfold. Earnings season begins next week. That's typically unofficially kicked off by J.P. Morgan, who's reporting earnings, and will then be followed by the rest of the big banks. And J.P. Morgan today was testing some recent lows. So while the NDX looks great, technology looks great, financials still continue to lag, and the big names especially, they're hovering around their recent lows. I know Wells Fargo is down at very close to its March lows. JP Morgan not quite there yet, but certainly in the last few weeks has been trending to the downside. The one good thing I might add is that on that chart for the Nasdaq 100, we can see that the breadth readings do continue to improve, and that's definitely noteworthy. I think on Monday of this week, the NDX, about 27% of the companies in the index were making new 52-week highs. Last Monday, it did pull back and retested those the prior recent highs, the prior all-time highs, and that did hold as support. As technically we would expect it should. And since then, it's up almost 11% from last Monday. So just, phenomenal move higher, and the breadth is behind it, improving.
All right. And Brian, I also want to take a look at your next chart here. Anything that we're learning from the VIX?
Yeah, so this is noteworthy because, as we said earlier, the S&P and the Dow, they've, spent the last 4 weeks consolidating. Certain groups like financials don't look great. And here we have the VIX, which last month in June, it bounced off its 200-day moving average, went up about 40%. This week, it's bouncing off of that again. It hasn't had the lift off that we saw last week, but I should say last month. Last month's bounce was the biggest we've seen since March. But it proves to be a very short-term phenomenon. So it'll be interesting to see, what the VIX does from here. It bounced modestly off its 200-day moving average. So at the moment, it's acting as support. We know more broadly, we're entering, those mid-summer months where as we approach August and September on a seasonal basis tend to be the weakest performing months. And so It'd be interesting to see, how the markets behave from here. That's why we're saying over the next week or so, we may learn a lot. We have the start of earnings season, the big banks with their commentary and their guidance. That's going to be most crucial to see what the banks are expecting to come down the pipe as far as in regards to credit, especially, and what they're going to have to do to their reserves and how much they'll have to increase those reserves over the coming quarters. And with the VIX kind of, bouncing here up to 200-day moving average, it's all kind of coming together. We'll see if it comes together in a perfect storm where we'll have, this is leading up to the early stages of what we'd say the biggest correction since the lows. That's a possibility. However, certainly doesn't have to happen that way. We could, look at it from a glass half full perspective and say, financials and energy and other areas of the market that have been on pause for the last 4 weeks or so, maybe what they're just doing is simply working off those overbought technical readings from the rebound in April and in May into early June. And now that they've completely done so, are ready to move higher. And if the market is going to move higher, if the S&P and the Dow, the Russell, if they're going to try and catch up and close the performance gap with the Nasdaq 100, you're going to want to see these other performing or these underperforming groups, a lot of the value groups, as we mentioned, energy, financials, industrials, materials. We want to see those groups begin to start to participate in a more meaningful way. One stat that is interesting to note is that in the early going in April and May, when everything was rebounding off the lows, it was the financials and energy, which had sold off the most, that we're seeing the biggest bounces. But if we look now, what groups have had the biggest bounce off the 52-week lows? Actually, the Nasdaq 100 has had the biggest bounce along with the composite, up 58% off those lows. The Russell is right there behind it, but it had such a much more dramatic sell-off. On a sector basis, discretionary and technology are the top two performing groups off the lows, where as let's say about a month ago, it would have been financials and energy. So technology and consumer discretionary really just, driving this market higher right now. But we do going forward want to see these other underperforming groups relative to tech and discretionary close that performance gap. That's what I think we're going to need in order for the rest of the market, for the rest of the major indices, the Russell, the S&P, the Dow, to close that gap, join the Nasdaq 100, which if you're a bull, you do want to see that.
All right, Brian, great stuff as always. Thanks so much for joining me on Trade Talks.
Okay, thank you, Joe.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.